Dipen Seth, Head of Institutional Research at HDFC Securities. Well, Dipen, let me straight away, tell our viewers why we are, inviting you today and why you have not joined us in the studio itself as you normally do. Dipen is on the sidelines of the HDFC Securities conference where they are showcasing a lot of chemical companies. Why chemicals, Dipen?
Lata, it's interesting that you should ask me this question. This event is, I would hate it if you called it just a conference. We've christened it as the chemical age. So you had the human race going from the Stone Age all the way to the digital age. So why on earth would we, call it the chemical age? And that's a little bit of a tease, because what we are trying to showcase here is the fact that the chemical industry is one industry which is seen as a perennially, uninteresting and boring industry with very poor growth or margin or return dynamics. And people might think that this industry doesn't really have the potential to deliver equity returns to serious investors. The events of the last 2 or 3 years have proved these naysayers completely wrong. And as the country steps into better days, achhe din as you would call them, for the next 5 or arguably 10 more years, we suspect that this is one space which still holds the potential of throwing up multi-baggers. So out of the 8 companies, and there are only 8 companies that we've called to this event, only 2 of them are anything over 1,000 crores market cap. 6 of them are below 1,000 crores. 5 of them are below even 500 crores market cap. And the reason why we've had this focus is to bring to investors the possibility that you might get multi-bagger returns from these small cap and mid cap stocks over the next few months and years.
Okay. Dipen, hi, good morning. It's very exciting to see a whole host of, perhaps undiscovered companies in your list. So let me start off with Apcotex, a stock that you're very bullish on. It is an Asian Paints promoter company. So just take us through what kind of potential you see in that name.
So I will refrain from making specific comments on any of these companies, because if we knew all that there was to be known about these companies from an investor perspective, we wouldn't have needed to call them and highlight them or showcase them to investors. That said, Apcotex has seen a very smart run-up. It's trading at a trailing PE of about 26 or so. We think there is again multi-year growth potential here. It's a company that has been, in various forums it has been described as a dormant volcano of sorts. But I'm saying let's not take these opinions too seriously. We'll wait till the end of the day and get a serious deep down look into each of these companies. So what I'm saying for Apcotex might be equally true for Abodal Chemicals, which is coming out after 2 or 3 disastrous years where it almost went under. Then there is the very respectable Tata Chemicals, which is like close to $2 billion market cap, and where we see again the possibility of multi-year potential coming back to the company in terms of various growth and business dynamics at its various divisions. So I will refrain from making a specific comment on any of these companies right now. Let me find out more.
Okay. Well, what's going good now for the chemical lot now? Are some of them winners because of the steep fall in crude prices and expectations that it's going to remain that way?
Yes, Lata. A lot of these companies do have raw material linkages with crude. The fact that crude prices are falling helps them. The fact that end product dynamics, whether it is in the specialty chemical space, which leads on to paints, varnishes, rubbers, and so on, these markets are buoyant. Some of the specialty chemicals get into pharmaceuticals, which is a story which I have highlighted time and again. There's a lot of supply constraints coming up in APIs, and you might be surprised at how much API upstream product manufacturers and even API manufacturers might be able to deliver in this space. So we've, as research analysts, we are used to looking at companies with a formulation tilt, but this might well be the time to look at APIs and even pre-API manufacturers. So there are very interesting opportunities opening up as a result of the dynamics playing on both sides of the business in chemicals and specialty chemicals. It's also driven by the fact that over the last 2 years there has been a remarkable clamp down in terms of environmental controls and restrictions on chemical companies in China, which were going berserk and haywire in terms of the cost structures and the price points at which they were delivering these chemicals to the global market. So some of that clamping down has had a salutary effect on specialty chemical companies in India, and the fact that we are on the cusp of bigger things as an economy in more general terms only adds to the expectations from these companies.
Okay, let me ask, sorry, an allied question. Have you changed your opinion of the oil marketing companies, HP, BP, IOC? Because crude now has started falling so much that people are worrying about global refining margins.
No, we have not changed our views there at all. Many of these companies are slated to gain disproportionately from falling oil subsidies in the country, simply because it's going to improve their working capital cycles. So that part of the thesis hasn't changed. If you tell me are refining margins going to fall off, yes, I suspect some easing of refining margins will be apparent, and at least it's apparent in the big daddy, which is Reliance. For me, these companies do not represent a play on refining margins as much as they represent a play on improving regulatory dynamics in the industry. I don't think refining margins will crack to a point where the refining businesses deliver zero or negative returns. I could be proved wrong, and I will stick my neck out here and say the reason to be gung-ho on oil marketing companies is not that their refining businesses are good, bad or ugly. It's just that the government is getting its act right in terms of oil subsidies, and this is a multi-year story. Yes, there has been a re-rating. Many of these companies have doubled and more in the last year, but I still feel there's tremendous upside even from here on.
Okay, I just wanted to get one follow-up question on the point you made earlier about the growth in the chemicals industry. What kind of growth do you think we could see, on an average? Because if you just take an example of Aarti Industries, a stock that or other company that you've invited, in FY14 there was a 25% growth that they saw in their top line. Is that something that these companies can replicate in FY15 as well?
There isn't a single answer for all companies, or in an average sense, as you put it. It's like saying, what is my view on the Nifty? So I don't think that's the way to look at it. These companies make a myriad of chemicals. God knows there are thousands and sometimes even millions of products if I put all chemical products being manufactured globally by all companies together. And not all these products account for a similar fraction of revenues at each of these companies. So different companies will gain or lose in different ways. Also, I think the strategic choice that many of these promoters will make with respect to what to make and what not to make is going to make a hell in heaven difference. It's common to see a 50 or 60% gross margin in certain chemicals, and it's equally easy to see a 5 or 10% gross margin in certain other chemicals, where you might see very high throughput, but where you might see very little value addition. And that's what happens, let's say, in refining. You have oil quoting at $100 a barrel. Remember that even refining is a chemical industry in many ways. So oil quotes at $100 a barrel, and earning $10 of gross margins there is a tough ask. But if you look at a company like Adi Fine Chem, the gross margins they achieve are 3-4 times more than that. Okay. Which is a much smaller company, much smaller industry. So that's what specialty does for you.
Okay. Do you like any of the paint companies now? Many of them have run up.
In the context of chemicals, I will say it's irrelevant to look at paint companies if you are hot or cold on chemicals. What's important for the paint companies is that at the end of the day they are a consumer product manufacturer. And if anything, their pricing power should increase in the days going ahead as housing and construction takes off in the country. No wonder you have companies like Berger and Asian Paints trading at 30+ multiples. A lot of investors are a little worried about these valuations, and I would say the kind of multi-year growth potential that these companies have and the kind of strength of brands and distribution that these guys have makes these multiples actually justifiable. Okay. And it's not that just the beta stocks are going to take off in this phase. You have consumer companies like Asian Paints and Berger, which will continue to trade at perhaps even higher multiples than where you see them today, because I suspect there is going to be a case of earnings resets upwards happening, if not for F16 then F17, which we should be seeing in about 6 months' time from now.
Okay, let's get one query that's been posted on our Money Control message board, Dipen. Manoj Thani Kal writes into us from Tamil Nadu. I hope I got his name right. He wants to know if he should continue holding on to his investments in Infosys and if there's anything else from the IT space that you could suggest.
So Infosys is the big boy of Indian IT, which has gone through a stumble in the last 3 or 4 years, if you ask me. I have said this earlier on your channel and I'm saying it now. I think the generation change or shift has played out. It was a little embarrassing for the company that one of the founders had to come back and put things right. But I think that's largely in the past. And to his credit, Mr. Murthy has done a wonderful job in steadying the ship, no matter that more than a dozen top-level exits happened before, during, and even a little bit after that phase of steadying the ship. And under Mr. Sikka, I think Infosys has finally managed to get a stable and strong leadership that it was always capable of attracting and maintaining. I don't think the Infosys story is in any danger of getting over in the near term. Given the larger, tailwinds that Indian IT enjoys right now, there is no reason why Infosys should not be a core part of any IT portfolio, or for that matter, any portfolio.
Okay, final question, Dipen, are you worried about the 2-day break that the market took and that small FII sell figure? Is the market in for some longish consolidation? And in any case, what are you rooting for in the Nifty itself at this point?
Lata, I have said this earlier, I am not in the business of taking a 1 or 2-day call or even a weekly call on the markets. We are here to advise serious long-term institutional investors. The long term for India, if you look at anything beyond 6 months, and I'm saying anything, looks better than it was, than what it looked like any time in the last 5 years. There is no reason for us to suspect that this bull run cannot continue well into the future. Yes, valuations might shoot up a little bit this way or that way, and then there might be a consolidation phase. And depending on how globally things pan out, you might see the consolidation phase stretching for a little longer or a little shorter. But here is the big picture. We seem to have got our act together after 5 years of, I may say, frustrating drift. And if you're not, excited about India at this point of time, and willing to swing with the pendulum, as I call it, even a little bit on the other side of the logic for a while, when will you do so? When will you not want to make big money and disproportionate money in equities, if not now? Okay. There is nothing wrong with India right now, except perhaps, if we get back to our bugbear of shooting ourselves in the foot. So India's biggest enemy continues to be India. And right now, that enemy is not visible.
All right, Dipen, we leave it at that. How can we forget you've called this the golden decade for Indian equities? You have a great conference. Thanks so much for joining us.